right now, which compares to be higher than the benchmark GRMs as well.
TVS Credit Services has gotten a 480 crore funding equity infusion from Premji Investment. A pretty good start, 50 points in the green. The Sensex is up 150 points.
This year, there is also strong possibility of positive Indian Ocean dipole conditions.
But the frontline indice is quite flat right now.
And therefore, 4.35, 4.4 would be a damn good number. Anything lower than that, of course, will mean even better news.
0.4% higher on the midcap index, and that's outperforming the benchmark right now.
Well, that's the day so far, and we are getting into the last hour of a fresh new week. You're with us here on a new edition of Closing Bell. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Surabhi and Nigel. Guys, hi, good afternoon.
Good afternoon.
Things
welcome to the studio. Good to have you here, Nigel.
Yeah, absolutely.
Nigel makes a rare appearance once in a while in this studio. He's happy upstairs.
We've got Mangalam, by the way. Let's not forget, Mangalam's with us, joining us from the newsrooms. How's it looking there, Mangalam?
Well, less noisy for sure, but not too bad, not too bad. It's fun always.
All right, well, welcome, Mangalam. Let's just quickly take a look at what things are looking like. I mean, not very much to report on. It's quiet, very, very quiet. Quiet in the newsroom floor, quiet in the market as well. About 1/3% higher on the mid-cap index. Actually, mid-caps and small-caps is where there is a bit of noise once again. And those indices are doing pretty well. So Nifty mid-cap on your screen, and the small-cap index is doing even better. That's been essentially what we have seen for the last several days now. The Nifty is not doing very much. It's subdued, as I said, so 0.24, 0.3% kind of gains. Supports coming around the 18,500. We're about 100 points away from that level. And globally, there are more than a few things to watch. The big thing, if you had to pick one out of the 3 or 4 central bank meetings, it's of course going to be the FOMC. Tomorrow we get the CPI data in the US, and then Wednesday we get the Fed decision, which we react to on Thursday morning. So that's the lineup here. But in some ways, it's kind of continuation from last Wednesday. Thursday and Friday, we had some interruption, some pullback, small, minor, but we had some pullback. But mid caps and small caps are taking off from last Wednesday, and it's looking more or less up and up there. Surabhi.
Taking off and how, Prashant? Really, I was just looking at some of these names. I mean, look at a stock like Delivery now. It's up 7, 8, yeah. I think 9%. In fact, it's now up 9.5% and counting. So the market's very clearly moved on away from looking at the headline indices, completely moved away from that. It's made its peace with it. You just look at individual stocks, and the moves have been pretty stunning today. Garden Reach is up about 8%. On Cochin Shipyard, obviously, there's news. They've got an order, about 300 crores worth of an order for a naval vessel. So that stock's been in the limelight ever since. But even if you sort of go beyond and look at some of the other names, these are some of the ones that I spotted earlier on. You've got CMS Infosystems. That stock has been up and about right from actually Friday. We told you what the management said. The block deal happened. We alerted you about that. And consistent buying after those blocks as well. 5% up today. A couple of the other names like Gokuldas, Indocount from the apparel, textile, export sector, they're up and about. But there's so many names in between. I guess, Nigel, the market is well and truly not now fixated on when that all-time high will happen. You make your money, and I guess over there are plenty of opportunities in mid-caps and small-caps.
Well, I think it's, the bulls have said, okay, we'll get there when we need to. But for the time being, let's enjoy the party that's going to the mid and the small-cap indices. So
instead of worrying about,
let the headline index wait for what the Fed has to do. We are not waiting for anyone.
Absolutely.
The mid-caps and small-caps are off to the races. But I'll tell you what, looking at the options data, not really factoring in any kind of disappointment coming in from the Fed, which could be a bit of a risk. 18,600, 18,500 put. Just take a look at the open interest built up out there. Between both of them, there's a massive surge in open interest. In a single session, you're talking about 85 lakhs shares getting added. So just keep an eye out on that front. That's telling you at least the positioning is such that we don't go and break the 20 DMA, which is at around 18,450 approximately. So let's see how this goes. But for the time being, this put writing is keeping the bulls in the game, and lower levels are likely to get defended and get bought into. The Nifty Bank, yet again, it's having a bit of an off day, down close to around 100 points. It's underperforming today. 43,700 is a crucial mark out there. In the last 10 sessions, it's been between 43,700 to around 44,500, 800-point range. And as of now, at least, there appears there's no plan to break that range. But Mangalam, what else are you tracking?
Well, in the mid-cap end of things, you know, Nigel, you guys pointed out a couple of stocks. I'm just looking at a theme in general. Anything that has anything to do with global markets is, you know, rallying. So this morning we had the management of Carousel tell us that all the big box retailers in the US have completely, you know, de-inventorized themselves. So now looking forward, they're looking to build their inventory, and that's reflective in the kind of moves that we're seeing in a lot of these, you know, textile exporters. Surabhi pointed out Gokaldas Exports, as well as another company. But just keep an eye out on Himmat Singh Ka Said as well. That's one which is surging. We have some exports coming in from the likes of Sheela Foam as well. So that's the other stock which is up around 9%. And a big move is what we're seeing in delivery and all the other new age companies. So this month so far, Nykaa is up 15%. We've had Zomato, which is up 15%. Delivery, on the other hand, was an underperformer. So that too is perhaps playing a bit of catch up. So now this week, that stock is up around 8.5%. So that may be a catch up to all the other new age companies which are finding some sort of favor, believing that maybe global interest rates are at peak, if not near peak itself. So that's a bunch of mid caps that I'm watching out for. But on the options itself, Nigel, you know, the 18,600 call has been extremely active as well. So those who are looking to write the 18,600 call and put together, they are hoping for a range of 18,450 to around 18,750. And these are for options that expire on Thursday. So up until then, we will also get a lot of global data coming in as well. So irrespective of what the Fed does, the option writers believe that the market's not breaking that range in the near term, at least.
Okay, well, you know, we'll see how this goes. So for now, things are looking pretty steady. Well, how should you position yourself in the last 60 minutes of trade? That's the question. Mitesh is with us with his closing strategies. Mitesh, hi, good afternoon. So not very much really to report on the Nifty, as we've all pointed out. But individual stocks, there's, you know, a lot of stuff like last week. Mitesh?
Sorry, I think I missed that part, the last sentence which you said. There's some connection.
No, do you have a trade on the Nifty, or is it going to be where the action is? I mean, go where the action is, which is mid caps and small caps.
Exactly, Prashant. Good afternoon. I think very clearly the index is not showing signs of expansion, and therefore I think you will not get much directional movement happening. So even if you make a few points out of there, as a trader, you would want to possibly look at the best of the opportunities, and that's not in the index for the time being. I think the breadth is where the attraction is, and you were rightly highlighting a couple of stocks when the show began. I think the idea is that you should be stock specific for the time being. Index, I would still want to venture a buy in case you get Nifty closer to about 18,500 levels with a 50-point kind of a stock. But otherwise, I think, you know, I'll hold my horses there. On the stock side, Shriram Finance is a buy with a stop at 1419 and a target of 1475 on the upside is what I think the stock can do. Eventually, I think it can go high. But from a trading point of view, 1475 is a first target. The other stock which I like is UBL. After a big breakout, it's given a 2-3 day kind of a pullback. So with today's low of 1460 as the stop loss, look for targets of 1520 here.
All right, got that, Mitesh. Thanks very much. We'll come back to you with some more trading calls in a bit. But let's focus on some more stocks. As we've been saying, it's all about individual trades today. Now, a lot of the specialty chemical stocks are in focus. I want to pull some of them up just to highlight the kind of price action that we're seeing. So PI is the one that's actually doing very well. It's up about 3.5%. You have SRF, it's already on the ticker actually right now, which is down about 3.5%. I mean, fluorine's been down. So the talk point today is the export data that has come out for the month of May. And Sonal's been poring over those numbers. Sonal, any clear trends coming out?
Well, largely it's negative in the month of May is what the export trend is looking like for the specialty chemical space, barring a few of them, of course, and those are reacting positively in trade today. Let me start with Aarti Industries. It has been a decline on a YOY basis, 46% down in terms of exports for the month of May. They have spoken about weakness in their discretionary portfolio, and that seems to be putting some pressure on their numbers. For Aether Industries, they have a big exposure to exports, close to 69 to 70%, and both on a YOY and on a month-on-month basis, it is a decline. Alkyl amines, on the other hand, stood out with 29% increase in exports. Anupam Rasayan, again, the other one which has an exposure to the European markets, saw a decline of 79 to 82%, both on a month-to-month and on a YOY basis. Atal Limited was lower. Archean Chemicals, which is the newly listed marine chemicals industry, that is the one which did well this time around. Balaji Amines saw a decline on a YOY basis. Clean Sands was the one which saw a decline. Deepak Nitrite again has a sizable exposure to exports, saw a decline here. PR Industries on the other hand really stood out, and that's some positive rub-off that we are seeing on the stock as well. Exports is a bigger chunk. It has been outperforming on exports for the last couple of quarters, and that seems to continue in Q1 as well. If we look at Lakshmi Organic, it is lower on a YY basis, but some improvement on a month-on-month basis. The likes of Navin Fluorine did really well, 44% higher there. Their HPP project will be fully commissioned here. They will cater to Honeywell, and that is a big chunk of the exports, which seems to be doing well for them. We have Sudarshan Chemicals, where the company did speak about the improvement that they are seeing in exports. FY24 will be driven by exports as well, and that seems to be working well. SRF, surprisingly, a decline both on a month-on-month and on a YY basis. So more declines than gains is what we have seen in the month of May, and it will be an important factor to track for chemical companies.
Okay, all right. Thanks a lot for that, Sonal. Dilip Bhatt joins us as well on the show. Dilip, what do you make of these data points that have come in? SRF, the stock is down 3.5%, big value creator. Would you be looking to buy into this dip or any of the stocks that Sonal just discussed?
I think within the chemical space, of course, we all know that the export data is the trigger point for most of the stocks taking a hit. But even on a longer term basis, I think some of these stocks, without any doubt, are trading at very expensive valuations. And so one has to be extremely careful when you come to this particular pack. And you really have to pick and choose. And if that were to be the case, I think SRF is something which we certainly will be looking to add as and when it corrects in a slightly more meaningful way, because that is a stock which has got a very good basket of growth plus kind of a good steady annuity kind of businesses, which is yielding them a good amount of free cash and a good amount of profits and a very healthy ROE too. So I think SRF certainly is one of the stocks that we will be looking for. And I think amongst the others within this pack, I think Navin Fluorine still appears to be relatively much better. And you know, the actual potential of Navin Fluorine is yet to be played out, which is what we will see in the coming 12 to 18 months. And I think that's a stock one should watch. Otherwise, within this pack, I will still be a little more apprehensive on an overall basis and be a little more careful.
Okay, all right. You know, SRF is what you like. Jeffries, by the way, would agree with you. They have SRF as one of the top ideas, although I think IIFL, on the other hand, the IIFL analyst thinks there is some 20-25% downside as far as SRF is concerned. But different views, that's what makes the market. Sugar is the other one which we're going to just pose to Deepak in just a bit. But monsoons and El Nino have been the talk of the town. How will this impact production? More importantly, prices. That's the question we put to Vivek Saraogi, Managing Director at Balrampur Chini. Listen in to a little bit of that, and then we are back.
There has been a very defined trajectory to cane price increase. It is tepid. It is dealing with reality, and nowhere has it shown any spike, even in the previous elections. So if we see the central government elections of last time, which 2019, in that year, the cane price was not raised. There is no evidence in history in UP of this sort. So one event of another state down south impacting cane price in UP, I would not even, sort of start to correlate it. So if we see El Nino, this is the first year, and El Nino conditions do last when they come. It is not a one-year phenomena. So that's something to be kept in mind. I do not see any danger to the ethanol program because cane is far, far ahead of that. If at all, exports may be cut. Sugar prices definitely will take a firmer tone as we move ahead. Because the fear of surplus is now receding definitely.
Okay, that's an important point. He says that Mr. Saraogi himself said that, El Nino, when it happens, and the last one was in 2016, the impact lasts for a few years. But Mr. Saraogi's take is that this basically means higher sugar prices, net for the industry, which is not bad news. Dilip, good afternoon. Any thoughts, anything you like here in this space?
Prashant, I heard what Mr. Sarogi said, and of course, he is definitely the defining and the most respected figure in this particular industry. Having heard what he said, I still feel that sugar stocks, one should be extremely careful as we head into election year. I think the inflations are just been very high last year, and I don't think that sugar as a commodity, anybody will take a chance. And in my opinion, whatever it takes, government will do to keep it under control. Having said that, there could be a short-term opportunities. It could just rise over next 2 to 3 months. Some of the sugar stocks that is very much possible, but it's very difficult to take a long-term bet on a sustainable basis, because even ethanol is actually taking a lot of sugar cane. So I think somewhere ethanol, sugar prices, all of them will come under increasing scrutiny, which otherwise has been pretty good for them so far. And the way some of the newspaper reports about the weather and El Nino that we are talking about is favorable for the industry. I still remain apprehensive, and one should be very careful unless and until you have a grip on the trading.
Okay, all right. Dilip, I request you to stay with us. For the time being, the markets are holding in the green with a gain of around 40 points. We'll be back after this snappy break. We'll continue our chat with Dilip. We'll also be joined by Anand Shah from ICICI Pru AMC. Stay with us.
Welcome back. Well, it's just about a 0.25% gain on the Nifty. The index hasn't moved at all. The pivot has been 18,600, and we've been around that level for the bulk of the day today, so that's not really changing. However, we are, of course, looking at all the individual stock action, and life insurers have been quite the focus today. So let's actually look at the data that came in. The trends for the month of May were out, and this reflects a premium contraction, actually, of 4%. On an aggregate basis. This is on a year-on-year level. Yash is here with all the analysis. Yash?
Well, Surabhi, first 2 months of FY24, and for both those 2 months, LIC has been a drag as far as the industry numbers are concerned. If you look at the industry growth in the month of May, the premium for the industry has contracted by about 4% on a year-on-year basis. If you look at the first 2 months of the financial year as well, the premium for the industry is down 15% on a year-on-year basis. Private life insurance companies have performed decently well, so May premium as well as the first 2 months of FY24, the premium growth has been about 9% on a year-on-year basis. Now let's speak about the weak company and the weak performance in the month of May. LIC, the May premium was down 11%, and now if you look at May and add it to the first month, that is April, the first 2 months of FY24 for LIC, the premium is down 28% on a year-on-year basis. Another big pain point for LIC has been the loss of market share. With the fall in premium, the market share for LIC in FY24 on a year-on-year basis, that has contracted by 746 basis points. Now let's look at the other companies as well. HDFC Life, the May premium growth of 26% on a year-on-year basis. For FY24 so far, the premium growth stands at 14%. The retail APE for HDFC Life in May was also up 10%. ICICI Prudential Life Insurance, weak numbers in the month of May. The May premium down 19%. 2 months FY24 premium down 18%. Retail APE seeing a growth of just about 4%. Max Life, strong numbers in the month of May. The premium grows by about 16% on a year-on-year basis. FY24 so far, the premium is up 9%. May retail AP saw a meager growth of just about 2%. Finally, the strongest company out of the lot in May, May premium for SBI Life Insurance was up 58% on a year-on-year basis. First 2 months of FY24, the growth of premium stands at about 36%. Retail AP in the month of May also grew by about 8% on a year-on-year basis.
All right, Yash, thanks a lot for that. But what are the brokerages making of the same?
Well, there was a very interesting note which came from Morgan Stanley on the May life insurance numbers. The industry view for Morgan Stanley remains attractive. They are overweight on HDFC Life, SBI Life, as well as ICICI Prudential Life. They say that SBI Life is the top pick for them, followed by HDFC Life and ICICI Prudential Life Insurance. Morgan Stanley has highlighted two important triggers for FY24. The first one is a pickup in retail protection segment, and the second one is an expectation of 15% plus APE growth, especially in the second quarter and the third quarter of FY24. As far as the target price for Morgan Stanley is concerned, they see the current target price to be in the range of 20 to 34% upside for these three companies under their coverage. Not just that, they see a significant potential for further upgrading of the target multiples. There was another note which came from Kotak Institutional Equities. The sector view for them as well remains attractive. HDFC Life, ICICI Prudential Life, Max Financial, SBI Life, LIC, all these companies, they have a buy call. For HDFC Life, they see a fair value of 725 rupees, ICICI Prudential at 610 rupees, Max Fin at 1000 rupees, LIC at 1000 rupees, and SBI Life at 1500 rupees. They point out two important points in their note: business momentum pickup in May 2023, and second, pickup in retail protection, as pointed out by Morgan Stanley as well.
All right, Yash, thanks a lot for that. So that's about the insurance space, but Dilip Bhatt is still with us. Dilip, you know, a lot of these textile exporters are doing extremely well. Do you think there is something worth looking at in terms of an investment? And if yes, then which one are you looking at?
Well, I think in this particular space, as what we understand, that quite a few of them had corrected in a very big way and possibly had not gone anywhere for a variety of reasons in the past. But I think from here on, maybe I think some of the companies that look reasonable from the valuation perspective, one is Arvind. I think Arvind is certainly one of the stocks where I think valuation-wise, still quoting at around maybe 12-13 times for FY24 is what I understand. And I think that's a stock which has good potential to move up over the next 12 to 18 months. I think that's a stock which one should gradually acquire in their portfolio. And of course, I think Welspun also remains a very strong candidate, which should be on the radar. Of course, we need to go a little more into the details about the predictions for the next 2 years to arrive at the prices that can come. But I think Welspun certainly looks one of the stock which should be put up on the radar for buying. But overall, I think on an overall basis, one has to pick and choose in this particular sector, because we have seen in, the experience in the past, and we will not really rush to buy some of these stocks across the industry.
Okay, got that, Dilip. Before we let you go, just a word on the oil marketing companies, refining and marketing. We're seeing some very interesting price action. I mean, right now, BPCL is the top gainer on my Nifty screen. And there's a lot of positive brokerage commentary coming in, Dilip. We know that we're not paying any lesser for petrol or diesel at the pump, right? That means better margins for these companies. But the stocks have rallied. BPCL is up 12% this year. IOC is up 20% this year. So the question is there more upside? What's your view?
Well, I think if one were to assume that the oil has peaked out, and obviously that is a very big assumption, then I think certainly most of the OMCs should still head up much higher from the current levels. And of course, they have moved up because they were at a very low levels. So that possibly is not a very fair comparison. But very frankly, I would say that all three of them, IOC, BPCL, HPCL, even from the current levels, can still give an upside of around 20%. As we see the oil prices plateauing, and I think the margins will come back. And all these companies also have a very good amount of dividend yield, which also comes into play. So taking all these three factors into account, I think all this IOC, HPCL, BPCL, all three of them can give around 15 to 20% return.
Okay, all right. Thanks very much. Good speaking with you, Dilip. Appreciate you joining in here on CNBC TV18 as always. Thanks indeed. Anand Shah is now joining us. He's head of PMS and AIF investments at ICICI Pru Asset Management Company. Anand, great to have you with us here. Thank you very much for your time as always. Let's just start with the latest or the last changes that you've made in your portfolio, what you can tell us, that is. Not that you're working on right now, but what you've already effected. That'll give us clues to your thinking. Go on.
Hi, very good evening. Yeah, so I think very clearly, if you see the results that have gone by and the strength that we are seeing already, I think banking still remains the area where the earnings growth rate has been strong. But not only that, even the outlook for that sector remains fairly optimistic. Even the entire manufacturing pack, which we have been for a very long period of time being very positive, because that's also one big part of banks' NPA book, infrastructure, the manufacturing. And as that looks up, as that continues to do well, we are also seeing fairly good resolutions coming. So overall, not many changes been made on the portfolio side of late. But if you ask me, what's been outcome of the FY23 results, fourth quarter results, I think we still remain fairly constructive on a B2B part of the economy, notwithstanding there is a slowdown in US and Europe. But the domestic markets look strong. Exports, we believe, will pick up. And to that extent, B2B and the allied businesses like corporate banks remain fairly comfortable when you look in context of the valuations at which they are.
From all your portfolios that we know of right now, at least the top 10 holdings for all your portfolios, one of them is the consumer space, the other one is the IT space. Now, both these sectors haven't done much in the last year or so, barring a couple of stocks. ITC, for instance, has taken the FMCG index higher. But, in your ACE portfolio, you have two retail names, and that's interesting. You have Trent and you have Avenue Supermarts. Both these stocks made news last week. Trent after, the way Zudio has grown, and Avenue Supermarts, when there was an upgrade coming in from a brokerage, they believe that now the valuations are palatable and the prospects for next year look good. What are your thoughts on the retail space in India?
Indeed, within the B2C space, we've been very, very selective, and consumption as a whole has been doing extremely well, especially pre-2020 when the inflation was fairly benign. Consumption stocks not only benefited from a low inflation, but also by virtue of being brand owners and had some pricing power. So I think valuations were not cheap to start with in 2020. So we've been sort of more, as I said, overweight B2B, underweight B2C, and within the B2C, we've been very, very selective. The consumer-facing businesses. One of that area has been organized retailing. I think the organized retailing is here to stay. While it did have some sort of disruption during the COVID period, and even before that, as a lot of online e-commerce businesses came up and had a lot of money to burn, and to that extent, they also gained significant market share. But the businesses which could survive both the disruptions, the e-commerce disruption as well as the COVID disruption, actually are coming back very strongly. Having said that, they've also cut the cost, became more competitive, and some of them are actually going ahead and also benefiting from the online strategy. So I think organized retail is here to stay, here to grow faster than the overall consumption growth rate, and we will have to continuously be watchful of the valuations. No doubt, these businesses are not undiscovered stories. These are the companies which are well discovered, and to that extent, valuations will always be a challenging here. But nevertheless, we will have to weigh it every quarter.
Okay, got that. Anand, hi, good afternoon, Surabhi here. So I was noticing something going through the portfolios, whether it is the flexi-cap strategy or, some of the others that you have, that a lot of banks make it to your top holdings, whether it's an HDFC Bank or a BOB or, some of the others. But at least in the top holdings list, NBFCs or insurance or asset managers for that matter, the other side of the non-lending side of financial institutions, that was kind of missing. For instance, I didn't see digital lenders or a Paytm. So what's the thought? Why you'd be convinced of banks is one part of it, but what's your view on the non-lenders or the non-bank lenders, so to speak?
Sure, I think banks gives you the perfect play on both asset and liability side. So as you rightly said, the life insurance and the asset management plays on the liability franchise of the banks, or NBFCs would be more of an asset franchise. With banks, you get to play both liability advantages as well as asset. So if you recall, in the early phase of March 2020, June 2020, around the early days of COVID, actually the insurance companies were bought, and any NBFC or a bank which actually had assets on its book suffered or was sort of at a lot of risks. But if you see more recently, and as I've been I said a while back, that actually the asset side of the book is looking better. While you had a significant long periods of pain post the asset quality review and through the Demon, GST, RERA, and the NBFC crisis, the banks had to provide year after year for the NPAs. What we are seeing more recently is one, the existing book is stress checked and to that extent is behaving fairly well. But even from your back book of NPAs, you're able to get recoveries also. So I think banks are, the way we see, is better poised relative to the other PCs also in terms of valuations, that you have low cost liabilities with you at the same time. Asset side of the business is also, providing you good profits. So that's how, on the risk reward basis, when we evaluate the entire BFSI sector, we still find some banks being far better off than the others.
Anand, I saw a couple of textile names as well in your portfolio. This space is doing very well. There are apparel makers like Gokuldas Exports, yarn companies, Vardhaman, Indocount, Himmat Sinka, seems to be doing very well in the last couple of weeks. Seems to have picked up. Something changing there, or what are your thoughts? And which ones do you like? I mean, what segment do you like rather?
I think a lot of manufacturing, including the cotton, textile, yarn value chain or metals or others, they actually were big beneficiaries in the early phases of 2021, 2022. As your competition from China, which was very, very stiff competition pre-2020, has ebbed. Very clearly, China's competitiveness in the commodity level of manufacturing has reduced. but so be it. It's while it's a structural piece, cyclically China will keep on having over capacity, which we saw last year when they had a severe lockdown, and to that extent, many commodities we saw a resurgence of exports out of China into the rest of the world, including India. I think what we are seeing more recently is while China opened up a while back, we will see slow and steady recovery in the Chinese economy and the consumption. And to that extent, that's the one piece which will reduce a lot of pressure on the global commodity prices as China, a very large economy, second largest economy, will start picking up in terms of consumption. The other thing which we noticed more recently is also India's textile also suffered last year significantly as India's cotton was significantly more expensive than the global cotton. I think that's also corrected in this season. And to that extent, the competitiveness the Indian cotton yarn manufacturer or all the way up to April, the entire value chain has improved as the cotton prices have corrected to more reasonable levels and more relative to the global cotton prices. So I think these are the couple of things which might be the reason. But overall, the way we are seeing is India's manufacturing continuously have an opportunity if you have a right business, if you have a right to win, to continue to do well for a few years as China's competitiveness in commodity manufacturing will keep on going down.
Just want to point out, these are interesting updates coming in from Tata Motors. What they've done is they've made an exchange filing. There's an investor presentation, a JLR investor presentation that's just been uploaded. And it's stating some interesting points. Some of it we know already. For instance, their promise of delivering £2 billion of free cash flow in the current year, FY24. I just wanted to do a comparison in terms of how much of an improvement that would be. This one part, the 2 billion free cash flow is actually known. Their free cash flow numbers were much, much lower, just £521 million in the year that closed, FY23. What else is Tata Motors saying? The margin promise is pretty significant if they manage to deliver it. 6% EBIT margin, this is JLR, all JLR data that I'm talking about. 6% in FY24, 10% by FY26. They rounded off FY23 with just about 2.5%, I think. Yeah, FY23 was 2.5%. They're saying this year, 24, they'll touch 6% and 10% by FY26. Some pretty interesting updates coming in from the investor presentation, and net zero debt, net cash positive by FY25. So a lot of the promises from the JLR team there being made in the investor presentation. Just thought I'll point that through, Mangalam. Tata Motors, I guess the stock has had a humongous rally, right? So, which is why it's not shooting through the roof. A lot of that perhaps already in the price, and the market will want to see the delivery on these promises now.
Yep, they will. And interestingly, it's the one auto stock which is not there in Anand's portfolio or across the portfolio, because I was looking at it. The two motor names that he has, one of them is Maruti, which is a part of their ACE portfolio, and the other one is TVS Motor. TVS Motor, Anand, is at a record high. That stock as well. Your thoughts on both, Tata Motors, TVS Motors, and Maruti? Why you prefer Maruti and TVS to the other names that are there?
No, obviously, I can't talk about the stock-specific ideas, but nevertheless, since you've asked, I think the overall outlook for India's auto angs, and as I said, generally for manufacturing, is the way to see is there are many moving parts in the auto industry. To be very honest, it's not a straightforward. I think the big risk that exists for the Indian auto industry, or for that matter, global auto industry, is the EV risk. I think one need to be very, very careful with the auto stocks that one owns, that are the ones which are really prepared for the EV disruption, or rather they are going to be the participant to the EV disruption. Because if you're not, then there's hardly any terminal value for auto business if you don't have an EV strategy. So I think that's one very important risks that exist. What also it does is also it creates a very new dynamic. So Indian auto industry is also fairly consolidated. We have leaders in many of these segments where an individual company has a very large market share. What EV does is also it allows a new entrant to come in at the same level playing field with the existing incumbent. So there are a lot of risks to the incumbent auto companies in India even
Right.
with this in technology at this.
All right, Anand, thank you for joining in. Always a pleasure speaking with you. Thank you for taking us through your investment rationale across sectors. With that, we'll step into a short break. On the other side. As always, we'll get you a check on what the reading groups are saying in our D Street chatter segment. Also get you buy today and sell tomorrow calls from Mitesh. Welcome back. The Nifty stuck to that 18,600 mark, but the mid-cap index is at the high point of trade with a gain of almost 180 points or 0.5%. But that really does not tell you the story of the day, because the cash stocks, we have Garden Reach, which we saw an 8% gain on that stock when we started the show, is now up 12%. Sheela Foam up in double digits. Delivery is the other one which is up in double digits as well. And Suzlon Energy is the next one, which is up in close to double digits, up around 9%. So a bunch of things happening beneath the surface out here. And to dig all those out, we have, as always, with us Nimesh, who joins in with an insight into the dealing room chatter. Nimesh, what's happening out there in these cash market stocks?
Mangalam, it's all about broader markets, and I guess the start performance is also because there is a lot of disbelief now.
Yeah.
Every week when the broader markets are outperforming, there is a feedback that it's done now. You may see a bit of a selling pressure from here on. I guess that's the disbelief which is leading to further outperformance in the broader markets, because there is not much participation coming in from the HNIs, and there is a select pocket which is done well. But overall, for the broader markets, there is a bit of disbelief. I guess that's the reason why it's outperforming. As you rightly pointed out, the Nifty has been consolidating, and that's been the third week now. It's been ranging in a very small range for the last many weeks, and that's the start of this week as well. But in terms of flows, again, a good day in terms of flows, and there is a lot of traction in the PSU stocks. When I mean PSUs, it's across the PSUs, whether it's PSU, OMCs, whether it's power sector stocks, or even for that matter, the PSU banks are well bid. That's the overall feedback. The other sector which deserves mention is the mid-cap IT. That's been the trend in terms of quarterly results as well. Right. The big outperformance in the mid-cap IT numbers, and you've seen a bit of traction in those names even in today's trade. But as you rightly pointed out, there is a big traction in the cash stocks. You pointed out a lot of the names as well, and that's overall feedback. There is a lot of traction in the cash stocks. But broadly, the big messages in the broader markets, because of the big outperformance, there is a disbelief now. And the reason that there is not much expectation of a big outperformance, I guess this outperformance will continue. All right. So you spoke about the cash market stocks. I did speak about a couple of names as well. But do you think any of the names that I mentioned find themselves a place in your list? So from the list that you mentioned, Mangalam, the first stock is Delivery. Huge volumes on that stock. Multiple blocks have changed, and I believe some large investors have bought into this block deal. So the disclosures could be quite important as far as Delivery is concerned. The second stock is BEL. Again, the whole defense theme is done very well. Even at these levels, after the recent outperformance in BEL, there is a buying traction from larger FIs in this particular stock. So delivery volumes are going to go quite high in BEL as well today in today's trade. The third stock is HBL Power. We saw a big outperformance in that stock as well, but the first time there is a feedback of some bid interest from larger FIs in HBL Power as well. That shows the kind of left out feeling which is there among a lot of funds as well in stocks like HBL Power. And the last stock is Zim Labs. This is interesting. A very small stock, just less than 600 crore market cap company. There was a disclosure as well on the exchanges that one of the large public shareholder is likely to sell a large stake. So there was a large block deal today, and the buyers could be interesting as to who's bought. But I was just looking at the shareholding pattern. A very prominent shareholder owns close to 22% stake in the company, and that's the reason why it came into my list as well. But there was a large block wherein a public shareholder was a seller in today's block.
Thanks very much, Nimesh, for that. Zim Labs. I mean, it's the first time, literally the first time I'm hearing of the name. Let's have the stock up if we, there you go. I mean, it's up 5%. Nimesh said the prominent investor owns a very large, significant amount of chunk in the company, and there are some blocks, etc., which have also happened today. Volumes are, by the way, through the roof, and you will, I guess, we'll get details later in the evening. So that's an interesting one. Nimesh, thanks again for that. Nigel.
All right. A lot of stocks actually from the broader markets are moving around. NBCC has moved to the high point of the day. 10 minutes or so ago, the stock was in the red. It's moved into the green, so a bit of a U-turn out there. And Strides as well has moved higher. So I think the intraday chart, how that stock as well should come up for you on the screen. Midesh Thakkar is back with us. Midesh, what ideas do you have, buy or sell trade for a reverse trade in the coming days?
So I would suggest, I think, taking some long positions home. Ultratech Cement is something, which is near the day's high, closing very strong. So it's a BTST with a stop below 81.50 for targets of 82.70, 75 for tomorrow. And the other one which I like is AB Capital, Aditya Birla Capital. That's a BTST with a stop at 175 for targets of 180.
All right, got that, Mitesh. Thanks very much. Just want to add some more stocks because go beyond the index, there's so many names that you can spot. Godavari Power, 7.5% up. Repco Home Finance, 5.5% up. So there's so much action beyond the market. And actually, this is a point that Lawrence Polanco of CLSA was making. He said that perhaps the Nifty might just end up battling a little bit around this 18,600 mark. However, the mid-cap index, he feels, has broken out. And he also speaks about some of the key mid-cap themes, the stocks within the mid-cap space that are likely to see sustained breakouts. Take a look. We'll take that break and come right back.
You look at the absolute price action for the Nifty mid-caps. This is the first of the key indices that we track in India that's cleared through the highs that you made back into 2021 as well as 2022. So we've got a sort of confirmed breakouts with the momentum indicators rising with that. So we think at a minimum we've got 13% upside, but we have upside targets extending towards sort of 24% type gain. So we think that that's an important breakout that we've seen in the broader market. And then if you're looking at the mid-cap index relative to the top 50 stocks, you've seen that relative price action breakout of a 18-month consolidation pattern. So basically it just has the mid-caps as the leading part of the Indian market. If you break it down, there's a lot of autos within the mid-cap space that we've seen breakouts and some leadership there, and some of the financial services which have lagged. We're getting some breakouts from those two. So if I'm looking at subsectors within mid-caps, the autos and the financial services is where we're getting new breakouts that has leadership within the mid-cap space. Banks on the longer term side, we think is a key leader for the Nifty itself. And to get through the 18,800 area, we think that will be led by an ultimate breakout in the bank sector. But we don't think that happens in the short term focus on the mid-cap space. So the current mid-cap side, we think is leadership for at least a quarter, if not 2 quarters, before the Nifty can break out of its trading range.
Welcome back. Well, the markets are more or less range bound, but the broader markets, that's the space that's taking your breath away. A few stocks this morning, Loris Labs, Dixon Technologies. I remember they were down 1.5% in the first 15 minutes or so. Both of them have spiked up, moving to the high point of it. And keep in mind, they've bounced big time from the recent lows as well. So these stocks have done a bit of a U-turn. Market expert Anand Tandem joins us on the show. Hi, Anand. Good afternoon. Thanks so much for joining in. Well, you know, a couple of quarters ago, Anand, Dixon Technologies came out with a poor set of numbers. They couldn't achieve last year's guidance, and the street was like, they're throwing in the towel. If you did that, you know, you would not be very happy because the stock from there, I think, has rallied close to around 40%. Any view on the stock, Dixon Technologies? The theme seems to be, you know, going ahead. These OEMs, ODMs, they'll have a fair bit of business. But how much of it is in the price?
Well, you know, this is not a sector which I favor a lot. You are looking at a company which is going to make 5% EBITDA margin. And that's the kind of margin which, you know, it doesn't particularly excite me. You're totally dependent on the fact that the government is giving you PLI. Of course, Dixon is one of those among the few Indian companies which has actually managed to get the PLI because it's kind of met its targets, whereas most of the other companies which have applied for and got the right to get the PLI from the government have either failed if they are the Indian companies, or they are foreign companies which have basically exported to their own enterprises overseas. So, you know, the challenge is fairly steep in terms of being able to have the tie-ups. There is no doubt that Dixon has done an exceptional job in execution and is likely to be tying up a little more in terms of sales so far. But, you know, I'm not particularly impressed with the overall business per se.
All right. Anand, you know, couple of stocks that are doing well today, a couple of groups of stocks. They belong to one old economy and the other one is new economy. So on the old economy side, you have a bunch of these PSUs doing well, oil marketing companies, etc. You have oil related companies, HOEC surging as well. And in the new economy, we're seeing decent gains come by for a bunch of them. And delivery is the one which is actually leading from the front out there, almost a double-digit gain out there. Between these two, what would you prefer, if at all, any?
Well, you know, if you look at the themes that are operating right now, and to my mind, it is still pretty much finance, followed by capital goods, followed by energy, in my view, which is somewhat beaten down. And then, if you are a believer that you will not, you will get, you know, rural growth this year, then some of those consumer-facing companies which are oriented towards rural. Other than that, I think the only other contra play that you can look for is technology. I think most of the companies are trading at attractive valuations, and you know, based on when the market in the US becomes a little more attractive, especially on the finance sector, you'll probably see that these were good entry points. But other than that, you know, most of the other sectors are going on the basis of the near-term momentum, and are not necessarily, you know, showing you any great opportunities to make serious money, other than the fact that you're chasing the price.
Okay, got that. Anand, hi, good afternoon. I wanted to get your thoughts on one specific auto stock. It's the best performer this year in the auto pack. It's also the best performing Nifty stock of the year. And I'm talking about Tata Motors. You know, we were just looking at this investor presentation that the company's uploaded on the exchanges just now. Pretty, you know, tall promises on JLR once again in terms of improving margins. They're saying 6% this year, 10% by FY26, 2 billion pounds of free cash this year, etc. But the question is, how much is already in the price? Is it too late? You know, do you think the story is topping out now? What's your view?
So let's take a company which is a comparative, let's say something like a BMW that typically trades at 3.5 to 4 times EV to EBITDA. You look at where Tata Motors is, at least the JLR part of it, and you will find that it's probably at a small premium to that. Now, you could be giving a premium because it's a turnaround, but that said, you are actually using a number which is a forecast number, and therefore after that looking at a, you know, higher than 5 times EV to EBITDA. So you have comparables which you can invest in overseas where you don't have the same kind of issues. The other question is, where is the growth going to come from? And you have to remember that, you know, Germany, for example, has just got into a recession. You are still forecasting a slowdown in the US market. China remains a kind of undefined situation right now. Those are the large markets, Europe, you know, US and China for JLR. So if all those markets are in turmoil, how much can you really predict in terms of the top line or the sales growth for the company to really be able to be safe. As somebody else earlier pointed out, that auto is a sector where there is a huge amount of technological changes that are happening as well. So overall, yes, there is a certain definite upside that you are likely to get in JLR and therefore Tata Motors in the current year in terms of earnings. But I would imagine that a large part of it is already priced in. However, because it is one of the largest contributors to the Nifty profit gains this year, I would imagine that you want to keep it in your portfolio if you already have it.
Anand, by the way, we get the May CPI numbers later today. We've seen a rapid pace of disinflation, right? From not the last one, but the RBI meeting before that. The inflation number used to be 6.5%. Today, the consensus expectation is a little under 4.5%. Any thoughts in terms of implications if you do get a very in line with expectation number or even lower? How would markets take it?
Well, if you do get lower, I think the market will continue to cheer. But I think, these numbers need to be taken more from the directional importance rather than the actual number. You don't forget that a large amount of the CPI, etc., is actually managed by the government. If you're looking at fuel, if you're looking at food, and there is only a relatively smaller part which comes from the industry. Therefore, the direct impact on the industry is a little lower. I think it's better to look at where the margins are going for most of the companies. This year, there is no doubt that for most companies, margins will be better because commodity prices have eased off fairly significantly. But I would imagine that later in the year, we'll again get probably a spike in terms of fuel, etc. So it's perhaps not, it's not going to be directly impacting where the corporate profitability is going. So rather than worry too much about, the only issue one can think of is that it will probably justify RBI not having to raise interest rates again, and that would be more important than the inflation number itself.
Right. One thing that we start every financial year is with the hope that maybe this year the capital cycle will turn. What are your thoughts here? B2B companies which are making machinery, the companies which are enabling capex, do they make for a good investment bet right now?
Well, I think the market has priced that already quite a bit. If you look at any of the capital good companies, they are no doubt reporting good numbers. But the valuations also reflect much of that optimism. So to the extent that at least the slightly longer term capex plans cannot be changed very easily, therefore the books for most of the companies will get realized at least over the next 18 to 24 months. You can safely assume that most of the capital good manufacturers will report improving profitability. Now the challenge remains, how do you kind of value that, because these are strongly cyclical businesses. They have long periods where there have been nothing growing. The bet that one is really taking is the fact that corporate India has deleveraged its balance sheet and perhaps to some extent therefore has the ability to go out and invest. The question will remain, how much is the demand that you're looking at? So while the RBI numbers, for example, for capacity utilization seems to have inched above 70% now, I think you will still find that the capacities are probably understated and there is a lot more that can be done without significant increase in capex. So near term, I think, when I say near term, you're talking about the next 24 months. The numbers that will be reported will be quite robust. To the extent that this is a cyclical upturn, you have to be taking your own call on how long you expect the cycle to last and what valuation you are going to prepared to pay at, let's say, something which is somewhat early cycle right now, but rapidly heading towards the middle.
Okay, got that. Anand, thank you very much. Always great having you on the shows. We look forward to our next conversation. Well, with that, we are winding down what has been a pretty range-bound day, not too much on the index, but individual stocks, plenty of action out there. The Nifty looks all set to retire around the 18,600 mark for the day. Just about a 0.25% increase coming in on that index. It was a bank Nifty that kind of was quiet and was being a bit of a spoil sport for the bulls all throughout. Anyway, let's start with the gainer since we do have a green day to start the week. BPCL topping the charts really along with its other cousins IOC and HPCL. All marketing companies, some very strong moves seen today. Technology came back with a bang. HCL Tech, Infosys, TCS, decent gains, 1% to 2.5%, depending on which stock you're picking up. Some of the power play continued from last week on NTPC. Remember, the stock was pretty active on Friday, and Monday again, 1.7% higher. Adani Enterprises has seen some gains. And then you start kind of trickling out. Some auto stocks like M&M, Hero Moto, Bajaj Auto, they managed to find the buyers all over again. The morning was a little quiet on these stocks, but then they started sort of turning back. Maruti, not quite so. Maruti was down 0.7%. And then, of course, the financials, the big banks. So I guess that's where the bulk of the red was today night.
Well, let's take a look at the screens, Virbi. You have Suzlon that's up another 10% after the stock doubled from the recent lows. You have Reliance Power as well that's up more than 10% in today's trading session. Pull up a few more names. Jai Bharat Maruti stock locked up 20%. Sheela Foam up close to around 17% in today's trading session. Max India up close to around 15%. And you have Ramco Systems as well. That's up more than 10% in today's trading session. That's sort of a market. When you're doing a market wrap, you can go on and on actually, because from the broader market, Prashant, just take a look at the stocks. There's something like Karma Energy as well that's popped up on the screen, up more than 10%. So be a little careful, I would say. But if you got the stock right, well, you're making big returns.
I'm surprised that Reliance Power still manages to, partake in every mid-cap, small-cap rally, even now.
I mean, I'm seeing that Reliance Power name after a while.
Very long.
Today. I mean, but yeah, absolutely point taken. KPI Green is another one which is up sharply. CMS Info. I mean, some of these, of course, the textile names, Gokuldas, Himmat Sinka, Indocount, etc. Jai Bharat, Nigel mentioned. Lumax Tech is another one, I guess, in that space. The shipbuilders, Garden Reach was up sharply. Newland Laboratories was another one, which was higher as well. I mean, a few things down. Go Colors, there was that block. SRF was down. Greenlam was under pressure. There was an All Cargo, a Precall, a Triveni Turbine. But by the way, it's not as if the market breadth is wildly in the positive or anything. It's some 200 stocks separated gainers and losers. But the fact is, the list of volume-led gainers is once again far longer as compared to what went down, but went down with volumes as well. From all of us here, it's 3:30, end of the market, first day of the week. And it's quiet in the Nifty, mid-caps and small-caps, and strong small-cap index, almost about 1% in the green today. From Surbi, Nigel, me, Mangalam, everyone, thanks very much for staying with us here on Closing Bell. But we'll take a break. On the other side, our special show, Give Wings to Your Savings. The mutual fund industry comes up next. Stay tuned for that.